Where does money come from? It comes from this guy, John Maynard Keynes. Just joking. Well, half joking. But seriously, if you don't know who this guy is, you should look him up because he is really influential in how our current economic policy runs today. So we all know that the US dollar is the current world reserve currency. And here's a little chart of the histories of the different world reserve currencies throughout history. They each last for a little bit over 100 years on average. Before we had the British pound, before that was the franc, before that was the Deutschmark. And we all know that President Nixon took us off of the gold standard back in 1971, pretty much giving the middle finger to Europe saying you can't have your gold back. And we all know that the Federal Reserve is a private entity that was created in 1912 by a bunch of banksters who got behind closed doors in a meeting on Jekyll Island to create it. So where does money come from? Well, it starts with the United States government. Well, the United States Treasury, who issues a bond, a debt instrument. And that debt instrument is eventually bought by the Federal Reserve, who buys it from money that doesn't exist. So then, poof, it creates it out of thin air. So this whole economy is based on a debt-based system. But the majority of the money that is in circulation is actually created through a process called fractional reserve lending. And here's a little diagram that we'll walk through. Okay, so the Federal Reserve has just purchased a bond for $1,000, step one. And so that's all the money that's in existence. And then so at step one, let's say somebody who owns this $1,000, let's say you, deposits it into a bank. And that bank wants to make a little bit of money on it. So it's like, why is it just sitting around? Let's lend it out and then get a little bit interest on it. So it lends out $900 to person in step three. And then let's say it's a car loan. They want to purchase a car and they go to a car dealership with this $900 and they give it to the car dealer, get a car. And now the car dealer guy goes down and deposits that $900 into the bank. So now the bank owes $1,000 plus $900. Remember, there's only $1,000 in existence, but now in circulation, there's $1,900. And this process just cycles over and over again. The bank lends $810 to some other person. They spend it out into the economy, and then whoever receives it, then they deposit $800 into the bank, and then the bank again lends it out, and then so how much money is owed to these people who have these deposits in the bank is a lot more than the money that was actually created, and then this can grow exponential, and that's the amount of money that's in the system. That's the amount of debt that we have floating around and holding our economy together, and that's what makes bank runs so dangerous. Is because if all these people say, "Hey, where's my money?" the bank doesn't actually have your money in the bank. It's all lent out. And here we're on the US Debt Clock website, and immediately people will go to the upper left corner thinking, wow, the US debt is $34 trillion. That's a lot of money, which it is a lot of money. But in reality, the amount of money that's in circulation is probably closer to $622 trillion. And although we're dealing with a lot of inflation right now, some economists believe that deflation might be the bigger threat in 2024. So with all this talk of economic turmoil, where are you preserving your wealth? Let me know in the comments, and don't forget to like and subscribe.